and in today's video we'll break down how fast this company is growing and disrupting the fintech space and its end-to-end platform. And not just that, it's also expanding into e-commerce and hospitality as well, and even space commerce. So we will look at the Shift4 current earnings report and we'll compare it with the past earnings report and see how well these earnings were executed by the management. We will talk about the profitability as well, the bull case, the bear case scenario, and the valuation as well. And we will get to know why some analysts think that this could be one of the most undervalued growth stocks in the market and in the fintech industry for the year 2025 and 2026 as well. So without further ado, let's get right into it. Hey everyone, welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. And like I promised that I will try to be more consistent for you guys. And today I have bought another great undervalued growth stock for you guys for the year 2025 and 2026, or for long-term growth stocks. And the stock is of course Shift4 Payments. So without further ado, let's get right into a detailed presentation, a deep dive into Shift4 Payments stock for a better stock analysis. So let's get started. Okay, so here is the presentation which I've made for you guys, and it's a detailed overview and analysis for Shift4 Payments. So for those who are not aware about what Shift4 Payments does, this is for you guys. So Shift4 is a payment and a commerce technology company that provides end-to-end payment, processing and merchant software. Yeah, and on the right side you can see that which industry, part of the industries they are targeting: in restaurants, in hotels, in sports and entertainment, and growing opportunity in the unified commerce business as well. So this is quite good. This is actually a bullish point. So Shift4, basically what it does is Shift4 builds a technology that lets restaurants, hotels, retailers, and big merchants accept payments, run checkout, and link those payments into the business software. So just in a layman's for you guys who are not aware about what Shift4 Payments does and how they earn their money, okay? So this was a letter from the last earnings, not the current earnings, but the last earnings report, and from the CEO, and he said, regarding our financial results, payment volumes were $50 billion, gross revenue less network fees were $413 million, and this metric is quite important, especially for such businesses, and I will get on to that, why it's important. And actually this builds a trust for us investors because this is kind of transparent. This brings a transparency for the metric for our adjusted EBITDA as well, and for the valuation, because many of the fintech businesses don't show this. And why it's important, we'll get on to that soon. Each of these were records for Q2 and up by 25, 29, and 26% respectively, okay? The results are not by chance. These are not by chance. They are results of having industry-leading products across large economic verticals like hotels, restaurants, sports, and entertainment. Like I said, it's a kind of a bullish point. And they also completed a raise of debt and convertible preferred stock, which is kind of not that good, but this was very well received by the market and was over 6 times oversubscribed. So it is kind of a red flag that they did dilution, but the market absorbed all the float in that case, let's say. So we used the opportunity to finance the Global Blue acquisition. So why it was done? For the Global Blue acquisition, and we will see that it did work in their favor. So this acquisition I was a bit skeptical about, but it did turn out to be quite amazing, and the results are in the current earnings, which we will discuss quickly as well, okay? So you can pause the video and check the shareholders letter, but these were the few important points which I wanted to discuss. Now let's talk about the previous earnings report. So there, the gross revenue less network fees, this metric which I said it's quite important, which management uses, grew strongly, and management cited 29% year over year. Payment volume was amazing, 35% year over year. Now takeaway, yeah, I have put a detailed analysis for you guys, so you can also pause the video and read by yourself. So what was the takeaway from this and earnings? So Shift4 is scaling fast, first of all, strong volume and revenue growth, and the balance sheet is large and more complex. Now that Global Blue has been closed, the acquisition of Global Blue has been closed, cash reserves rose, of course, yeah. Now, Q2 was a mixed bag of earnings. Top line growth was strong, but there were earnings and earnings per share misses. Okay, this was missed in the previous earnings. For some metrics in the market reacted to guidance, earnings mix. Management called out product adoption, SkyTab, merchant software, all these were, let's say, operating costs. So that's why the margins were affected. They raised the fiscal guidance for certain consolidated metrics, gross revenue, less network fees, and adjusted EBITDA after the quarter. And we will see if that happened or not. Okay, so let's see that. Okay, so here we are on the current quarterly results, which were released on 6th of November. I'm recording this video on 7th of November, so I'm not sure when I will release it, but these are the current earnings. So 26% year-over-year volume and gross profit 62% year-over-year. So if you check the previous highlights, 26% gross profit, and now 62% year-over-year, okay? 61% year-over-year gross revenue, and GAAP diluted EPS 0.17 and non-GAAP, of course, 1.47. By the way, they did beat the EPS. So this was again good. Adjusted EBITDA 56% year-over-year. So these are some amazing metrics. Now, why did this happen? Like I said, their acquisition of Global Blue was a successful acquisition, and this resulted in a margin of 43%, yes, and 68 million EBITDA contribution. So this is why this dilution, what they did, and the convertible notes actually did turn out to be quite successful. Okay, so now let's talk about some bullish analysis. Okay, so why Shift4 Payments could outperform. First of all, scale and merchant footprint. So I have just put it in a detailed version, yeah, so that everybody can understand, not just the experts, but also the beginners for the stock market. Big distribution advantage. So Shift4 already processes very large payment volumes, billions in transaction volume, and serves many merchants in hospitality and restaurants, like we saw. That scale lets it to sell new products, software terminals to a large installed base, which is cheaper than winning brand new customers. So they have a big, huge database and the base for current customers, existing customers, and they can use that for scaling and for new products introduction. And this of course cuts on the marketing expenses as well. So products breathe, so payments plus merchant commerce, tools plus hardware. So Shift4 mixes payments processing with software like POS, order and pay, SkyTab, and now Global Blue's cross-border retail functions they could also use after the acquisition. That means more ways to make more money per merchant, not just per transaction fees. If merchants adopt multiple Shift4 products, of course, more channels for one single merchant, more products, more revenue per product. Now, the strong cash position also gives them more options. With 3 billion of cash and liquid investment, Shift4 can invest in product, buy more companies, or support larger strategic initiatives like more acquisitions. But a big plus for a scale pay, that cash also cushions integration and of course interest costs risk in the near term. So acquisitions might not be always the best and organic way, of course, to expand businesses, but if they're doing it, if it's successful, then why not? Yeah, of course it costs money, and I hope that it doesn't result in much more dilution, but if organically they can do this, then would be the best. Large runway in verticals where Shift4 is strong. So restaurants, hotels, casinos, and retail are still moving to modern payment, yeah, like Shift4. And unified commerce, so they have these stacks of payments and different products, so this is quite good. So one-stop solution like Shift4 could be. Shift4 focus on hospitality and integrated solutions means a clear addressable market and easier product adoption with generic processor. And this is the Global Blue acquisition, what happened. So we can see attractive M&A Global Blue potential deals. The Global Blue acquisition was 2.5 billion. Equity price per share was $7.5, which instantly gave them a cross-border retail capabilities and thousands of retail relationships. In Shift4 integrates Global Blue well. And if Shift4 can integrate Global Blue well into their system, this could be dramatic, and we already saw, which I just showed you, that how the current earnings were, yes, a result of the Global Blue acquisition. Now, bullish summary after the Global Blue acquisition and all the bullish points is Shift4 executes. If Shift4 executes everything nicely after the Global Blue acquisition, cross sells its merchant software, yeah, and converts scale into the higher adjusted EBITDA, then the company could do wonders, yes, and then deliver strong shareholder returns as well. So we can see on the right side of this slide, the picture. So they have closed on landmark acquisition of Global Blue, expanding footprint to 75 plus countries. So this has opened a wide channel for expanding their product portfolio to these countries. Now some bearish analysis, like we always do, because this is quite important for our risk management. So why Shift4 or Shift4 Payments stock could disappoint us investors? Integration risk, okay? So Global Blue plus any future deals, acquiring a large international business like Global Blue brings cultural, systems and customer retention risk. Now, of course, if the integration cost, is higher than what they're getting in return from the customers, then of course, this makes less sense. Now, high debt profile and interest costs. So we know that Shift4 principal debt is $3.7 billion principal debt. While the cash is high today, debt servicing at higher interest costs or refinancing risk would put pressure on the free cash flow. This we already know. Now, margin and EPS volatility despite revenue growth. So Q2 showed revenue growth, but some EPS missed. This was the previous quarter, okay, not the current quarter. So this was the previous quarter. And of course, the acquisitions can temporarily depress other margins and other metrics as well. This we already discussed, okay? Not a big deal for now. Competition and fee pressure. This is quite important for all the fintech businesses, to be honest. So large payment processor, Fiserv, Global Payments, Aiden, Stripe, Square, whatever, Block, compete aggressively on pricing and tech. Margin pressures from competition or merchant negotiation possesses a structural risk. Also, consolidation in the industry can change dynamics. This is quite like normal and logical when we are talking about the fintech businesses and competition in this industry. Execution dependency and macro sensitivity. So macro sensitivity you will see in all of my bearish analysis, because that is something which affects the business, especially the fintech businesses who are more sensitive to rate cuts and interest rates. So that's why that is quite important. So the success of their products of the fintech businesses depends on the merchant adoption, and rollout delays can hurt near-term revenue, especially when there is no growth in the industry which Shift4 is targeting for example, hospitality, and retail consumer spend. If it's less, then these industry affects the most, and therefore no payment processing. Less payment processing means less use of Shift4 Payments. So after the bearish analysis, I thought, okay, let's sprinkle some more Global Blue acquisition data, so you guys are not that dissatisfied with the bearish analysis. So as you can see, Shift4 to acquire Worldline's North American subsidiaries, announced 140,000 gateway merchants across US and Canada. So as you can see, the market move up for the merchant base, the database for their merchants, 363% after the Global Blue acquisition. So this is what I wanted to also show you, that how this is quite good that they did this acquisition. This was a nice strategic acquisition in my opinion. So now this is again another catalyst or key factor. So they raised the guidance and we saw that they are actually reaching, they are overcoming their guidance. So they raised the guidance for the year 2025. And they said the management raised certain guidances range, gross revenue, less net fees, adjusted EBITDA ranges, but Q2 EPS has mixed highlights. This we already discussed about. So now this is the catalyst about raising the guidance. So you can pause the video and you can see that the guidance raise, which I already covered previously in this video. So they have raised the guidance and this is acting as a catalyst. So in the current earnings, we saw that they are actually implementing good to reach this guidance, the upgraded guidance, and this is happening. So this is quite good, though the stock price did not move accordingly, but it's still good that they're improving the fundamentals of the business. That's more important. The stock price will follow that, okay, sooner or later. Now, some competitor analysis. Now, who Shift4 competes with and where it might have an edge. So, main competitors, large global acquirers, processors, Fiserv, Global Payments, First Data, legacy players, and deep enterprise relationships and scale players. So, also Strip and Block comes into play. Developer and cloud native processors, Strip, Aiden, like I said, in developer integrations and global routing. Restaurant and hospitality would be Square and Block. Lightspeed, more focused on front-end software payments. Now, where Shift4 Payments can be stronger, hospitality and restaurant focus. So here, deep domain expertise for restaurant and hospitality. Shift4 has specialized products and go-to-market strategies, and unified commerce plus cross-border with the Global Blue acquisition. Few US processors offer specific tax-free shopping and DCC capabilities that only Global Blue had, and now Shift4 Payment has that as well via Global Blue. So this was the complete Shift4 Payments stock analysis, where you now have more information about Shift4 Payments, what it does, what were the earnings telling us, the upgraded guidance is being implemented by the management, and what is the competition. So this gives you a detailed overview regarding Shift4 Payments stock, and this is the purpose of this video. Now let's go on to the valuation model quickly, because that is also interesting. So for valuation model, the metric which I am taking here, you can see it. So 2023, we can see the metric growth rate, which is the free cash flow, was 23%, and then 2024 it was 55%. So we can say that, okay, let's take an average for the next 5 years, 30%, 30%, 25 and 25. Okay, so I'm not going really exorbitant, I'm not exaggerating this with 50, 60, 70%. So I'm taking a reasonable growth rate here with 30, 30, 30, and then reducing. Okay, and the average of these 5 years would be around 28%, and the multiple we will take 19, because the average in this, as you can see, was 19.78, even though the medium is 19 and high is 131, which might not happen again because the growth phase is over. Let's say the premium growth phase is over, so they are growing with acquisitions. This is good, but I don't want to take such multiples because that doesn't make sense at all. It just creates a bubble. Okay, that brings us to the valuation, and this gives us a future stock price of $132, which is double from here, more than double from here, and a fair value of $82. So the metrics which I have taken, as you can see, 5 years into the projection, metric growth rate, like I showed you, average 28%, and diluted shares growth rate is of course really huge, 15%. I hope this goes down. If this goes down, our stock price valuation goes up. Yeah, price ratio 19, which I do believe is decent for such a growth business. Yeah, many investors might argue like, okay, 19 is also on the higher side, and it should be 15 or 14 if you are taking a discount rate of 10 or 12%. But yeah, I wouldn't argue on that. This is my personal assumption. So 19, in my opinion, is still a reasonable price ratio to pay for Shift4 Payments, and it has been trading this like for the last 1 or 2 years, even though when they had a growth of 55% and also 20%. So in both the extreme ranges, they were still trading at a decent price to free cash flow ratio of 19. So I do believe that 19 is a reasonable one. And this gives us a compound annual growth rate of over 14%, beating the indices. And that's why me and my patrons, we have started a position in Shift4 Payments. Our average is around $66, $67. It's still trading at $67 at the time of recording this video. So that's all, guys. That's all I wanted to show you for the Shift4 Payments. And this brings us to the end of the video. I hope you guys really liked this video, and if you found this video helpful, please subscribe to the channel and hit that like button. I would really appreciate that. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.